The CEO of Ripple, Brad Garlinghouse, has previously stated that 99% of cryptocurrencies will disappear. In this video, we are going to dive into this theory from Ripple's CEO and break down other key points, including how Bitcoin's price has been artificially inflated over the past few months and how the lack of regulation for Tether in the United States could lead to an even greater Bitcoin crash. Let's get into all the details. That we have two categories in the crypto space: speculative cryptocurrencies versus utility cryptocurrencies. On one side, we have speculation, which includes meme coins. On the other, we have utility-based cryptocurrencies, such as ISO 20022 compliant tokens, with XRP as the payment standard. Today, we will analyze whether this market can sustain itself long-term or if we will see a massive collapse that I personally believe that not every project will survive in the future. There are too many cryptocurrencies and tokens that have no real backing or utility. A prime example of this is meme coins. We just saw how the US recently declared meme coins as non-securities, something that raises many questions. What is Donald Trump planning? Is he playing a hidden card? We are witnessing a lot of market manipulation. Meme coins are being given a free pass, while real utility projects are being ignored. What is really happening behind the scenes? Let's find out. The claim that 99% of cryptocurrencies will go to zero is a concept that continues to gain traction. I strongly agree with this theory. Many speculative projects will be wiped out in the long run. Bitcoin ETFs, for example, have seen over $423 million in outflows since their launch. Meanwhile, the US government under Trump's administration is tightening regulations on stablecoins, directly targeting Tether. If Tether collapses or fails to secure proper regulation, it will halt the artificial liquidity that has been flowing into Bitcoin. The truth is that Bitcoin's price has been artificially inflated over the past few months due to the continuous minting of Tether without real backing. Tether has consistently refused to be audited, which is a massive red flag. If they truly had the reserves they claim, why avoid transparency? This cycle is a critical turning point for crypto. Meme coins like Pan, Fan, and even Solana have contributed to the dilution of the market, drowning it in excess liquidity and promoting short-term gambling instead of long-term investment. Meme coins serve as a distraction. Instead of focusing on real utility-driven projects, many investors are still throwing money at meme coins, which provide no real-world solutions. The market has become a paradise for scammers. Even the President of the United States has launched a meme coin, followed by other global leaders looking to cash in. Trump, Melania, and even Argentina's President, Javier Milei, have all been linked to meme coin promotions. The crypto space has never been so saturated with celebrities, influencers, and bad actors exploiting retail investors. It has never been easier to launch a token, but at the same time, it has never been harder for a legitimate project to succeed. The winners have already been decided. The only surviving projects will be those that work closely with regulators and financial institutions, projects with real-world utility. XRP, Stellar, and all ISO 20022 compliant tokens will thrive. I truly believe that crypto speculation is coming to an end, making way for the era of real utility. Brad Garlinghouse himself stated that 99% of cryptocurrencies will disappear. This means that nearly all current projects will cease to exist. Regulations are coming. Ethereum is not compliant with European regulations under MiCA. In the US, it's also facing issues. Now, we are seeing Tether's operations slowing down, which means the artificial liquidity boosting Bitcoin is disappearing. Let's talk about the potential Bitcoin collapse. Edo Farina, a well-known analyst, warns that Bitcoin could crash by over 80%. This could be one of the most significant market updates in the history of crypto. A market collapse might be closer than we think. That if we look at historical Bitcoin charts, institutions have historically accumulated Bitcoin when prices were under $10,000. We saw high accumulation volumes in 2014, 2016, and 2018, and then again before the last all-time high in 2021. But today, if we examine Bitcoin's latest all-time high in 2025, the volume is significantly lower, about 70% less than in previous cycles. This means institutions are no longer buying. They're selling, taking advantage of retail liquidity. BlackRock and other major players were buying Bitcoin in 2018, 2016, and 2014. Now, they're dumping their holdings on retail investors at the peak. They need new money to keep Bitcoin's price artificially high. And once they can no longer attract new buyers, the market will collapse. MicroStrategy has been pushing the narrative that not buying at all-time highs is the biggest mistake of your life. Michael Saylor recently even said, if you have to sell a kidney to buy Bitcoin, do it. The reality is that institutions have been accumulating for years, and now they are using retail liquidity to exit at massive profits. If you check Bitcoin's trading volume, you'll see that the volume today is significantly lower than previous peaks, proving that new capital is simply not entering the market. Retail investors are beginning to wake up. Bitcoin has no real-world use case as a payment solution. It cannot compete with XRP. It is not scalable, and transaction fees remain too high. Bitcoin's inefficiency as a payment method makes it an unreliable competitor against utility-driven cryptocurrencies. The theory that 99% of cryptocurrencies will die is not just a theory. It's a likely scenario. Only a few strong projects will survive in the long run. What do you guys think about this? Do you agree that Bitcoin could crash by 80%? Do you believe that 99% of cryptos will disappear in the coming years? Let me know your thoughts in the comments. That's it for today's video. See you in the next one.